I have been investing in 5 suggested funds since April 2023. However, the funds and their allocation percentages have changed with 2 new funds added. What should I do with the old funds? As the goal approaches, I believe there may be a need to reduce the exposure to equities. Could you please advise me on how to proceed with this recommendation by the portfolio planner? As the tenure for the goal changes annually and consequently, the recommendations from value research also change. Does this imply that I should only use portfolio planner once initially?
So yes, it actually implies that there is no need to run the portfolio planner again and again, specifically for the same goal, because it is definitely possible that for a similar kind of request, the recommended funds may change. Because the suggestions that are given by the portfolio planner tool are optimized because of different factors, and so a different fund selection cannot really be ruled out. However, while crafting portfolios, what portfolio planner does is it essentially picks funds from the analyst choice list. So once the user has run the portfolio planner tool and made investment based on the suggestions, he or she can simply keep a track of the VR opinion on the fund. If any fund drops out of the best buy or buy tag, then the user should act. Till then, they can continue with their investments in that particular fund. Regarding the question on the tenure of the goal, let me give you the broad framework. So the idea is for your long-term goals, you can have an equity-dominated portfolio and continue investing in it. And once the goal starts nearing, the user should follow some basic principles to change the asset allocation and gradually move out of equity. And this can be a function of a couple of things, one being the target amount that the user is looking at. So once the target amount is reached or is comfortably within the reach, the user can actually move out of equity and move to safer asset class like debt. The second thing would be, anyways, when the goal nears, the user should look to withdraw. But if the user wants to play a bit safer, then he can or she can look to withdraw, let's say 2.5 to 3 years before the deadline of that goal reaches. However, if the user is okay to take on a little bit more risk, or let's say is okay postponing the goal when the market hits a rough patch, in that case, the user can look to withdraw sometime, let's say 1.5 to 1 year before, when the money is actually needed.